Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here's your weekly technical analysis of Paris rapeseed, Winnipeg canola and Malaysian palm oil markets. Paris rapeseed. In mid-June, the market broke up and out of the early July to late October 2022 bearish Andrews pitchell, which has its tines highlighted in purple on my daily chart. Initially, the market seemed unhappy about letting go of the broken upper tine, and I suspect that may have had a lot to do with the coincidence at the time with a congestion band between 438 to 445 and 3/4, and the then flatlining short medium moving average, which is currently 449 and 3/4. So for a while, the market used the broken upper tine as an attractor. It was only when the upper tine finally dipped below the congestions that prices fully tried higher. However, even then, the market ran into another, less powerful congestion area between 460.5 to 468 and 3/4, which contains the 2013 high at 464 1/4, also the June 2021 lower 468 3/4, and at the time the shallow declining medium moving average currently at 449 3/4. However, after some hesitation, the market broke up through this congestion, or these congestions, and had a fairly easy run up through congestion at 491 3/4, 497 1/2 and 504 1/2. It was only Thursday 2 weeks ago, when I was composing my video, that we saw the market really hit some serious resistance, made up from a congestion band from September 2012 between 513 3/4 and 519 1/2, but which was reinforced this time by the declining long moving average currently at 511 1/4. This capped the market, and prices have dropped off since then, all the way back down to the congestion at 438 to 445 and 3/4 once again. However, this congestion, as well as the nearby rising short medium moving average and declining medium moving average, have turned prices back up, such that we are once again pulling higher. Now, all this action has given me the opportunity last week to draw a new last day of May to late June bullish shift pitchell, which is highlighted in green on my daily chart. This pitchfork seemed to have merit, but this week has shown that it does not, and will be retired after this commentary. What it did do is highlight part of my commentary which I gave 5 weeks ago and repeated ever since, and I quote, "So what else does this recent action show? Well, we could look at it all as a possible descending scallop pattern build here, but, and this is a big but, it will depend on what the market does should it get down as far as the May low at 386 3/4, and there's a lot in the way in the meantime," end of quote. Okay, so last week I further finessed this descending scallop pattern idea thus, and I quote, "In this pattern, what we are looking for is where the market will halt in its ascent, so that we can then have an idea of the subsequent size of the move. Then we also need to ascertain whether this move is a further move higher or a pullback lower, so that we can apply the size of the proposed descending scallop pattern move to the already constructed actual move. At the moment, it is a little too early to see if the bearish action since the run up last week, that's some while ago, is it, but I will say this: halting at where the long moving average crosses a significant congestion area is a reasonable place to pay close attention to. I will add this final comment. Data indicates that markets break lower something like 8 out of 10 times for descending scallop patterns." And that's the end of the quote. Things are not much clearer this week, but I think that might be changing soon. Winnipeg canola. The drop over May, down through the 2021 low at 629 1/2, back 9 weeks ago now, saw a subsequent recovery back up through the June 2021 low at 655.90, over the combination of the then declining short medium moving average, currently at 730.10, and the old July 2008 high at 710.80, which actually was the gateway to congestion seen throughout March, April and May, and stretching up to the July 2021 low at 761.90. It had within it the then declining and now flatlining medium moving average, currently at 730.90. It is within this congestion, just under the declining medium moving average at the time, that the rally subsided, spending a couple of weeks in between the short medium moving average below and the medium moving average above. This whole action over the middle of May to middle of June period created a V bottom. Weeks ago I raised the question as to whether the V bottom would have an extension or a handle, if you like, and the answer was yes. But a pretty clear one, and one that turned out to also be a bull flag. This prompted the move up 4 weeks ago, it ended 2 weeks ago. And in the process, prices punched up through the July 2021 low, the March 2008 high at 770 even, which was a previous all-time high, the significant long moving average currently at 786.40, the August 2021 low at 817, the interesting 50% Fibonacci line of the May 2019 to April 2022 move, 820.60, and a September 2021 low at 839.20. This last one was significant as it was breached but not broken. Now, I also have to add a mea culpa moment right now, in that I did not notice the mid-April to end June reverse head and shoulders bottom until now. Thankfully, the topside target was aligned with the bull flag. Anyway, all this action allowed me last week to draw a bullish late May to late June Andrews pitchfork, highlighted in dark blue on my daily chart, which seemingly then had merit, but turned out not to do so, as prices last Friday dropped out and below it, down to the zone of the long moving average. However, I have today finessed this action by also drawing a bullish shift pitchfork for the same move, which is highlighted in bright red on my daily chart. This seemingly now has merit, but then I thought the Andrews pitchfork had merit last week. So treat this with a pinch of salt, especially as it has the upper tine, or has had the upper tine, currently at 866.20, compromised, and the lower tine as well, compromised yesterday, and that's currently at 786.10. I will retire the Andrews pitchfork after this commentary, but I'll reserve opinions on what may be next for at least another week on this one. Bursa Malaysia crude palm oil. The mid-August to early November 2022 mildly bearish shift pitchfork, the one highlighted in green on my daily chart, is still running the show here after so many months. This mildly bearish pitchfork has guided prices more or less lower, initially in between the upper tine currently at 41.48 and the middle tine currently at 35.16. Then for a while in May and June between the middle tine and the lower tine currently at 28.84, before moving back up again in between the middle and upper tines. The more recent developments had seen prices push up and stabilize over the slowly declining medium moving average currently at 37.76 and the flatlining long moving average currently 38.91. This stabilization had been very interesting, as the market has seemingly not only formed a recent hesitation area over July, but that hesitation area turned out to be a double bottom, with a target X for this pattern in the 41.20 area, just under the green upper tine. Last week the market made a huge combined key reversal up and bullish engulfing pattern that even penetrated the upper tine, and in the process finally reached target X. Our prices then moved back down through congestion at 39.86 and the February 2011 high at 39.53, as well as the long moving average, only to halt this week on the declining medium moving average. Below we now have the combination of the recent 50% Fibonacci line at 37.06 and a slowly rising short medium moving average currently at 37.04. Now, taking a small step back, the recent action since late May to last week gave me the opportunity to draw a late May, late June bullish shift pitchfork that you can see highlighted in dark blue on my daily chart. The market had tested all three times, but this week prices dramatically dropped down and out of this pitchfork, such that I will downgrade it after this commentary. It nevertheless has given me the chance to lay out some potential targets for a pattern below. Thus, a primary target X1 would be in the 37.33 zone, which is not that far away, and with a secondary harder to reach target X2 down in the 32.77 zone. Now, I'm not happy with this idea, not yet, not happy. I've laid them out because I feel obliged to do so with the break lower, but I would still place a big question mark on these for the moment, at least. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.